results. Revenue at 3.17 billion euros, up 4.2% year over year.
Reporting third quarter sales up 4.8%. Franklin Golf Romeo.
And Fed policy will be driven by the pace of the data. Same policy will remain accommodative.
Futures off concessions low, still down about 1% on the day for a little more than 4 pennies.
Welcome, I'm Mike Bellafiore. We're live from the SMB Training classroom discussing 10 trading rules. The goals for this presentation are to discuss 10 trading rules for you to consider and to help you improve your trading. This post was inspired by my good friend Charles Kirk, who writes a wonderful newsletter / service that you guys can check out, thekirkreport.com. His 10 rules, let's just go through them, and then we're going to come up with our own 10 rules. First rule, believe you can win. And that's a really great book. Bob Rotella wrote a book, Golf is Not a Game of Perfect. I used to actually suggest that book for our newer traders. I'd go check that one out. Don't be seduced by your results. Trading is a game of process. That's a great rule that Mr. Kirk comes up with. Rule number 3, sulking won't get you anything. That's true. I've never made any money in the marketplace complaining. Rule 4, beat them with patience. That's one of our 7 fundamentals in one good trade is patience. Rule 5, ignore unsolicited advice. There's lots of that out there in the Twitter sphere, stock twit sphere, Facebook sphere, LinkedIn sphere. Rule 6, embrace your personality. I wrote about that in the playbook. You got to find trades that make the most sense to you. Great rule there by Charles. Have a routine to lean on. Rule number 7. For this free training program that SMB U has released to you guys, we talk about a trader's day where we try to give you a routine for you guys to follow so that you can be working to build skill on your trading game. Rule 8, find peace in the market. I like that a lot. You don't have to make trading difficult. Find the setups that make the most sense to you. Don't try and master the hardest setups. Rule 9, test yourself. So true. So true. You, every day when you come in to trade, you want to push yourself outside of your comfort zone just a little bit. Don't push yourself too far such that you put yourself in a position where you may cause trauma to your trading career, but you do want to challenge yourself, push yourself a little bit to get a little bit bigger, to get a little bit better as a trader. That is a phrase very often said by our guys on our floor where they're trying to push themselves to be a little bit better. And then number 10, find someone who believes in you. I think that's so true. This is a game where you need support. So we run a prop firm, and there are plenty of times where guys knock on the door, come in and say, hey, I need a little bit of help, whether that's extra coaching, whether that's an outside coach, whether that's a draw, whether that's whatever it can be. You know, maybe they just need to chat. I have sat there and listened to hundreds of stories of guys who broke up with their girlfriends. We have a meeting every month where we go over every trader, and one of the common things is, did somebody just get married? Did somebody just break up with their girlfriend? Is there some new event that's going on? But having somebody to support you, understand what you're going through, whether that's a trading community, whether that's guys on the desk, very, very important for your trading career. So my 10 rules. First one is one good trade, one good trade, one good trade, one good trade. I hear there's a really good book written titled One Good Trade. That is my first book. And there are 7 rules that go into one good trade. Proper preparation, hard work, patience, a detailed trading plan, discipline, communication, review your important trades. Every trade should be judged on whether or not that you were thinking of and you mastered, you thought of, you had in this trade 7 of these fundamentals. If all 7 of these fundamentals are part of your trade, then you made one good trade. That's your job. If-then statements. This is old school. This is one of the first things we used to talk about when we started SMB was if-then statements, to think about what's going to get you into a trade. So you want to develop if-then statements for all of your trades. If the stock gets above $30, then I will get long. If the stock gets below $25, then I will get short. If it goes down and holds below $25, I will get shorter. And you want to have this sequence of if-then statements which you're thinking about before you actually make the trade. So when I'm sitting there trading, I'm thinking about lots of different scenarios. I'm thinking about if a stock gets, I'm trading Cruise today, if Cruise gets below $19.20, then I will short some more, and I will cover at 26 cents for my added shorts. If Cruise gets below 19 and holds below there, I will get really, really short. If Cruise gets below 19.51, I will cover. And I start to think about, if there's this big seller coming in, what am I going to do? How big am I going to get? And I run through the variables, the path, all right, the roadmap for how I'm going to think about how I'm going to attack a certain setup. Okay? If-then statements, very, very powerful. Rule number 3, doubling down. Okay, don't double down. We do not recommend traders to double down. I think there is a mythology out there that big traders have conviction for their ideas. And I wrote a pretty good blog post about this recently, which got a lot of attention, where I talked about you don't have to predict where the markets or stocks are going to go to trade. And one of the things that I think that amateur traders, newer traders, retail traders get wrong is they feel like they need conviction for an idea. And if something starts to trade against them, well, if it was a good buy at $25 and now the stock is $23, well, it's an even better buy at $23. A truism on the street, one of the market principles you learn is that when you have an idea about a particular trade, it starts to work for you right away. Okay, and if it doesn't work for you right away, not that it can't work, but most of your better trades, when you go back and study them, they'll be clean, they'll start to work for you right away, and your job really is how you double up. And I always tell this story about SanDisk. I wrote about it in One Good Trade. I really don't want to talk about it again because it actually puts me in a bad mood. But there was a trade I made years ago in SanDisk that Steve and I made, and we thought we knew where SanDisk was going to go. We came in, SanDisk had gapped down a bunch because there was a news blurb that Intel was coming into their space. Steve and I knew that Intel had tried to come into their space before, had failed, and we knew that they weren't very close to being able to compete with SanDisk in this space. And so that stock was gapping down. We thought it was a buy opportunity. SanDisk opens up, stops going down, we buy. Goes lower, we hit it. Stock goes a little bit lower, stops going down, we buy. Goes down lower, we hit it. Stock goes down a little bit more, stops going down, we buy. Goes lower, we hit it. We did this all day long. Okay? It was not a great day in the marketplace. We certainly lost quite a bit of money trading that, but we didn't lose as much as we would have if we had doubled down and doubled down and doubled down and doubled down and doubled down. We took small losses. They added up over the course of the day. I'm not going to tell you it was a good day. It wasn't. But it wasn't a day that we couldn't actually come back with. And what was most interesting about that play was, our thesis was that this stock was going to find a way to go higher and that it being down made no sense. Well, that day, all it did was go down. And then not even a week later, that stock went right back and much higher to where it had gapped down from. And you have to be able to control your risk as a trader. All right, number 4, max intraday loss. So we ask our guys to set an intraday loss for their trading. The way that we ask them to do it, it should be 1/2 of their median good day. So if a median good day for a trader is $3,000, then their intraday drawdown should be $1,500. The other rule that we actually use for this, we'll talk about a little bit later, and look, you don't have to use this rule, but you should have a rule. There should be a point where you say timeout. That's why coaches pull players out of games, because they're not playing well. And there's going to be a time where you're not trading well. And you do not want to be putting on risk in the marketplace when you're not trading well. It will happen. You're not going to be perfect all the time. There are days when I don't see the screens well. There are days when my good traders do not see the screens well, and they need to put on less risk, call a timeout, go for a walk, end it, cut it for the day, maybe even take a day off. One of our good traders took off last Friday, because he wasn't seeing the screens that well. You know, somebody who made over $50,000 last month just took himself out of the game on that Friday because he wasn't really trading that well. All right, these timeouts, these intraday stops are really important. All right, you're going to get things wrong. It's not a big deal, but keep those losses small. All right, rule number 5, be grateful. Very important. This is a privilege. Trading is a privilege. It's not a right. You don't have a right to make hundreds of thousands of dollars trading your E-Trade account. Okay? Think about the history of electronic trading. We didn't actually used to be able to access the inside market and trade electronically. When I was in law school, I made some of my first trades. I remember calling a broker up and buying Intel and Microsoft and Motorola over the phone and paying $50 for that trade. And that was the only way that I was actually able to buy these securities. And it wasn't until the mid-90s where electronic platforms were created where we right now can do what the big banks had a monopoly to be able to do. It used to only be that Morgan Stanley and Goldman Sachs used to be the only ones who could trade on the inside market. Now we can do that. All right, and actually, as an aside, the term day trading emanates from the fact that the institutions got really mad that, you know, the firms that I joined got better than the Goldmans and the Morgan Stanleys of the world and disrupted that part of their trading world. I mean, Goldman and Morgan and the big banks used to be able to day trade with no competition for years. I mean, and that's what they did. There was lots of revenue that was being derived by the big banks day trading. And no one called it day trading back then when guys were trading on the floor with direct access to the inside market, making hundreds and hundreds of millions of dollars a quarter. No one called it day trading then. It was bank trading. It was institutional trading. But when other people had the access to do it, all of a sudden it became day trading. And so, you know, you got to understand that trading is a difficult sport, and some people can do it for a long period of time. Some people do it well for a couple of years, can't do it after that. But if you want to stay in the game and sustain yourself, you know, you got to understand that you're going to be adapting and tweaking all the time. All right, be grateful. Plus, you'll just feel better when you're grateful. All right, number 6, do not give back 25% of your intraday gains. So if you're up a lot on the morning, let's say you're up $3,000, a good rule to have is not to give back $750 of that profit. I'm talking about if you've closed out your positions. Okay? Again, this is a rule for you to consider. This is a rule that lots of hedge funds use for monthly open profits. This is a rule that we use on our desk for guys who are growing. This does not mean you have to use the rule. It's something for you to consider. Rule number 7, trade review. So I wrote about this in the playbook, my recent book. Our guys on our desk do 2 things at a minimum before they actually go home. They do a detailed trade review, and they archive a playbook setup that makes the most sense to them. These 2 things, these trade reviews, are a part of them growing, developing, and getting better as a trader. I actually think these 2 things are more important than what our traders are doing during the market hours when they're trading live in real time. I think these 2 things are more important. Increase your size. So here's a good rule for that. We talked about this before with setting a median stop loss. A good way for you to think about increasing your size is after 10 positive days of trading to bump yourself up. That's what we do on our desk. Somebody is positive for 10 days of trading. We combine all 10 days, and if that number is positive, they get to go to the floor manager and ask to be bumped up. And the floor manager goes over to that trader's mentor and says, is this trader ready? And almost always, if you are positive 10 days, over a course of 10 days, you get bumped up on our desk. Think about that for your trading. Number 9, do not jump into a stock. You want to watch it first. Who are the buyers? What are the most important levels? And so we talk about this a lot. Before you trade a stock, you want to know the short interest, the average true range. You want to know the average daily volume. You want to know where the important technical levels are for that stock. You want to know the big picture for that particular stock. What's the story that the market is thinking about? Okay, there are things you need to know before you need to watch a trade. You want to get a feel for how it's trading before you jump into the stock. All right, got to understand information, and you got to see the way that it's trading. Very important principle. Do not jump into a stock. And number 10, be bionic. So this is a screenshot of SMB Scanner. And so on our desk, we use tools to help us be bionic. And what I mean by that is, in this market, you cannot miss the trades that make the most sense to you. We say A+ trades. So in the playbook, I talk about, in my book, The Playbook, I talk about every day archiving a playbook trade that makes the most sense to you. Then ferret out the best of those trades in your playbook. We say A+ trades. Those are the trades you want to put the most risk on. For those A+ trades, you got to make sure you're tapping into technology, creating filters, creating scanners, such that you have alerts for every single time one of those A+ trades triggers. You got to be covering, for your trading, you got to be covering all of your A+ trades. You build from your strengths as a trader. You got to be able to tap into technology to make sure you're never going to miss one of those A+ setups. And so we use tools on our desk like the SMB Scanner. That's something that helps us find some of our best trades. We have proprietary technology where guys build custom filters for their A+ setups. They fire all the time. All right, and we have tools that are making us more productive. Like the scanner helps us shorten our review time before the open by a couple of hours each day. And we have the AM meeting, which makes sure that we're in the right stocks. And we have tools like SMB Real Time, where we're making sure that we're connected with experienced traders who are giving us feedback as to what they're doing. You know, SMB Real Time, you can see some of the better traders' positions. They will chat what stocks they're in. All right, it's a place where trading ideas are exchanged. But that, in this age, you can't miss your best setups, and you got to be bionic. If you have any questions, please shoot me an email, and go check out our blog where we share tons of interesting trading stories and free trading advice. Thanks for watching.